Hello, Peter Locke here. I'm the CEO of People First Bank, and thank you for joining us today for our business update, our half-yearly update for the December 2023 period. So it's an exciting time for us, as you can see, the new slide of People First Bank, and we'll talk a little bit about that today. So today, myself and our CFO, Paul Williams, are going to give you a bit of an update as to how we've gone in the first half and a little bit of an outlook for the period ahead. So just looking at the general economic conditions. Now, we all know that it's a really interesting time. We've seen the cost of living pressures are starting to be spoken of quite a bit. So through this period, we've dealt with inflation and higher interest rates, which have really started to put pressure on household consumption. Now that's yet to really flow through, but we are seeing some signs coming through in the book, and Paul will start to talk a little bit about that as we go through. We think the interest rate cycle, probably on the data that we're seeing at the moment, our house view would be that that's starting to peak. We're not expecting those to start to ease until maybe later on in the calendar year 2024, but for now we think we're at the peak of the interest rate cycle, with the RBA closely looking at those economic data points, with unemployment gradually rising, now 4.1%, up from 3.7% from when we did this update in June. Now wages also growing at a fast pace, the fastest pace in 20 years at 4.2%. So what we're seeing though is most of our borrowers are still managing to balance those higher interest rates and using a little bit of savings, but still seeing that by and large the household budgets are in good shape. We're not seeing any big push in arrears. Paul will talk a little bit about that as we go through. But we think we are in for a softer landing than perhaps we at some stage thought, managing those expectations of the economy through the rest of the financial year 24 and then into 24-25. Should be interesting times, but we think we're well placed. Now our financial performance in that half has been very, very strong. We've had good, excellent really, loan growth, excellent deposit growth, and our balance sheet is in very, very good shape, and the underlying profitability of the bank is very strong. As I mentioned, our portfolio, we're starting to see a slight uptick in arrears, but that's off of a very, very low historic base. And really we believe that credit quality is in a very, very sound position with no problems forecast into the future. Pleasingly, a very strong capital position and great liquidity position, important as we manage those aspects going forward, and Paul Williams will update us just what we have done on the capital and funding positions of the bank in the last little while. That reflects the two capital raisings that we've done, the benchmark capital market transactions that we've just completed in the last little while, and Paul will give an update on that. Now importantly, the merger, how are we going with that? Well, you can see the People First Bank and logo is now officially launched. It's in market. We're presenting that today. We are officially 1 year old, and I think that we're moving on from that merger really well, a little bit ahead of budget forecasts of where we are on those major integration milestones. The focus though is very much on integration and moving through our program of integration to ensure that we deliver those merger benefits for members that we identified in the original booklets, so on the merger booklets. And we are really well placed, starting to go through the planning and actually into the implementation. And that will be a major focus of ours over the next couple of years. Now, whilst we've been managing those complexities of the merger, we have continued to focus on the business, and importantly, as you'll see in this update, that's reflected through a strong balance sheet, strong growth in lending and deposits above system. We've maintained high levels of customer satisfaction, and importantly, we've grown that membership base. So we've had a net member growth of over 13,500 members. Our net promoter scores, the indication of customer satisfaction and member satisfaction, continue to trend high, and our staff engagement scores are also high. And we're getting behind this new brand of People First. We've had over 600 volunteer hours from our teams in what we call the Good Squad, in getting behind our volunteering program and getting out into the community, underpinning all of those things that you knew Heritage and People's Choice about, which is starting to be hard examples for the new People First Bank. So we're really excited about the half year. We're very excited about the future. I'll talk a little bit about the future once Paul has given us an update over the financial results for the half. So over to you, Paul.
Thanks, Peter. From a financial perspective, the bank has performed very well in a highly competitive market, whilst also progressing the merger integration program. The numbers I'm going to reference today are all unaudited, so please bear that in mind. Profit before tax for the 6 months to 31st of December 2023 was $43.6 million and $30.8 million after tax. Underlying operating profit before tax, excluding merger costs, for the half year was approximately $50 million. Sustained lending growth across the half year was a highlight for the bank. People First Bank generated $2.27 billion in new loan approvals in the 6 months to the 31st of December, which is a notable effort and underlines our continued focus on members even as we bring the two businesses together. The residential loan book grew 5.9% for the half year against system growth of 4.2% over the same period. Consolidated assets increased by approximately $1.3 billion during the half year to finish the calendar year end at $24.6 billion. Unpacking the profit numbers remains challenging due to the complexities of the acquisition accounting treatments, but some notable highlights include net interest income for the consolidated entity was $244.7 million across the 6 months to 31st of December, which was underpinned by pricing decisions that always consider both depositors and borrowers, which has been particularly challenging during an interest rate rising cycle. The P&L also benefited from the strong credit profile of the portfolio, with impairment expenses well contained. The provision for impairment over gross loans and assets was 0.15% at 31st of December. We expect this metric to gradually increase in the months ahead as the reclassification of impaired loan categories required under the acquisition accounting standard gradually normalises. The provision for impairment over gross loans and advances was 0.15% at 31st of December. We expect this metric to gradually increase in the months ahead as the reclassification of impaired loan categories, which are required under the acquisition accounting standards, gradually normalises. Not unexpectedly, there has been sustained pressure on operating expenses, with total costs impacted by elevated inflation, as well as costs associated with merger-related initiatives. Personnel costs remain a focus, as do integration expenses, including the ongoing changes to technology costs associated with our transition away from legacy systems and platforms. Turning to the loan book specifically, a key driver of the merger was an objective for People First Bank to establish itself as the first truly national mutual ADI. This is clearly reflected in the geographic spread of the loan book as at 31st of December 2023. The book has and always will have strong exposure to Queensland and South Australia, as you would expect, but also a solid footprint in New South Wales and Victoria, which are targeted growth channels for the bank's future expansion plans. The key characteristics of the book reflect our conservative approach to loan origination, but also our appeal to borrowers across our target markets. Brokers continue to provide a strong basis for new loan acquisition, which is typical for the Australian market. The decline in the fixed rate portion of the portfolio reflects the current interest rate environment, with borrowers that locked in low fixed rates when the RBA cash rate was much lower, choosing now to transition to variable rate loans at the end of their fixed rate period. Importantly, the fixed rate cliff has largely passed without a material deterioration in credit quality. Payments in advance and arrears remain well controlled despite the higher cost of living environment. People First's funding base remains healthy, underpinned by ongoing support from our retail depositors. Retail deposits as a proportion of total funding was approximately 82% as at 31st of December 2023. The strong growth in retail deposits is another balance sheet highlight, which has helped manage the repayment of $460 million of the RBA's term funding facility during calendar year 2023. Customers continue to shift out of lower yielding transaction style accounts into the high yield savings and term deposit products. But this is an industry-wide trend and will begin to impact margins this year, particularly as low-cost RBA TFF funding is replaced. The bank has retained an elevated liquidity position during the first half of FY24 to support repayment of the remaining RBA term funding facility balances, as well as repay monies held as part of a legacy prepaid card business which was wound up in February 2024. People First Bank has ambitions to build a mutual ADI leading wholesale markets franchise in the years ahead, relying on a clear strategy, regular investor engagement and consistent benchmark-sized issuance. Our debut capital market transaction was successfully completed in September 2023, a $1 billion RMBS transaction. This was followed by an equally successful $400 million three-year senior debt transaction which settled in early 2024. Both transactions were materially upsized due to strong domestic fund manager support. Finally, People First Bank's capital position remains well above prudential minimums and will support core business objectives across the short and medium term. The solid profit result underpinned People First Bank's Tier 1 capital position, despite the strong growth in the loan portfolio. The RMBS transaction which we completed in September boosted the bank's total capital position as at the end of December. Sustainable capital management remains a core strategic objective of the bank and underpins resource allocation decision making across all aspects of the business. People First Bank has a significant integration program to fund over the next few years and expects capital levels to remain broadly consistent during this period. Balancing loan growth objectives whilst executing the integration program of work will be a key focus for executives and the board. It's a challenge the business is well positioned to manage into the future. I'd like to hand back to Peter now.
So thanks very much, Paul. As you can see that we've had a lot going on, but the bank is in really good shape. Now our outlook for next year for the final half and then moving in to 24-25, I think is really positive. We are positioned for strong future growth. That's building off the foundation, as Paul's outlined, of really strong lending growth, really strong deposit growth, and that continued growth in membership. Importantly, as we move into bringing People First Bank to life, there's going to be no change to our risk appetite, no change to our credit appetite, importantly. The bank is still underpinned by really great customers. We're spread out over our national geography now and concentrating on that home lending market that we have built over what is nearly 150 years of history. Now I spoke at the opening and Paul's also mentioned the interest rate environment. We are seeing those higher interest rates that we experienced through 2023 and 24. They do have an impact. Now that hasn't really come through in our arrears. We are expecting a very, very slight movement in the arrears, but nothing that would indicate that our members are in any financial difficulty, and certainly not in any difficulty that would transpire into the bank's balance sheet. Our member focus remains strong, and it will continue to remain strong throughout that integration period of People First. It's about balancing the needs of our depositors and balancing the needs of our borrowers, and also acting in the best interest of all members and, importantly, the communities in which we live and work. We do expect over the next period that operational expenses will continue to put pressure on, particularly as we move into expensive and complex integration of the ex-heritage systems and the ex-People's Choice systems, bringing them into one People First Bank system. But we are well placed in our strategies and tactics and business plans to manage those expenses so that we ensure that the profitability of the bank and the benefits continue to be delivered to all members. Now, I mentioned our People First Bank rollout. That will continue. The major assets of People First that you'll see come to life in the next little while will be rolling out through March, and then through the rest of 24, you'll start to see the People's Choice brand and the Heritage brand start to take a back seat as we roll out that one integrated People First Bank brand. And we're really excited about that. We think it's a great brand. We think it speaks to the heritage of both banks, but more importantly, it does what it says on the can. We put people first, and we will continue to do that. Over the next 2 to 3 years, we'll be concentrating on bringing all of those merger benefits to life. I think that that's going to be exciting. I'm sure that that's going to deliver those member benefits that we spoke, and that means that we are going to continue to be able to invest in our bank and the benefits for you, our members. Now that will reflect through products, it will reflect through services, but importantly also, it reflects through how we operate in the community, our ESG, our do good mantra that makes sure that the bank stands for everything that you value. The things that you value are the things that we value, and hopefully that reflects in the advocacy for our bank. So thank you very much for joining us for this update. Thanks for Paul for going through the financial details with us. It's an exciting period ahead, and I look forward to continuing to share our progress with you. Thanks very much.